Hello, this is Ian Cooper with TraderInsight. Wanted to take a quick look at shares of beleaguered shares of BlackBerry, symbol BBRY. Months ago, I got into an argument with a fundamentals-only friend. He doesn't believe in technical analysis. So when I told him that shares of BlackBerry were likely to move well off their lows, he laughed, told me I was nuts, and that short interest told him that downside and potential bankruptcy was more likely than upside. It's one of the most hated stocks in the market, he said. You're crazy. Okay, fine. I wasn't going to argue even though I knew I was right. I knew I had a tell that told me different. That was back on April 9th, 2014, as the underlying stock traded around 725. Now, for years, investors threw in the towel on BlackBerry despite its accomplishments. Apple was stealing market share, putting pressure on the BlackBerry stock. BlackBerry even lost close to $6 billion over the last 4 quarters alone. So the foolish herd did what any fool would do. They shorted the stock, calling for its death. This week, though, after earnings, the bears realized they were wrong, scrambled to cover their short positions, and sent the stock to an intraday high of 952. Fundamentally, it was a disaster. But it's been a fundamental disaster for years. Yet it still comes back because of one simple thing. It is not going out of business anytime soon. In fact, it just earned a profit in Q1. As CEO John Chen said, our performance in fiscal Q1 demonstrates that we are firmly on track to achieve important milestones, including our financial objectives and delivering a strong product portfolio. Over the past 6 months, we have focused on improving efficiency in all aspects of our operations to drive cost reductions and margin improvement. Looking forward, we are focusing on our growth plan to enable our return to profitability. In short, the company is trying to stage an epic turnaround. Once the bears and my fundamentals-only friend realized they goofed, they ran to cover short positions, and we got a resulting gap up from 818 to 953 in a day. Earnings whisper numbers weren't our only tell, though. Trading on earnings can be disastrous. You're simply taking a 50-50 bet with elevated volatility. My tell is entirely technical. Take a look at the chart on your screen. What do you notice with RSI and MACD since 2012? As soon as RSI dips under 30, and as soon as MACD dips around negative 0.5, the stock moves higher. It doesn't just happen with BlackBerry, it happens every day with hundreds of stocks. Coupled with moves on Bollinger Bands and Williams percentage range, calling tops and bottoms has become easier. We use this technique daily in our wildly successful services. As for my friend, he's still a bit peeved I was right and actually asked me to teach him my tricks. You're a funny fool, I told him. You're just like the rest of the sheep. Again, this has been Ian Cooper with TraderInsight.